What's up guys, Jake here. Genuine question for you, but why is nobody talking about Cathie Wood anymore? About 5 or 6 months ago on my channel, people would not stop telling me I was an idiot for picking individual stocks. They were telling me, Jake, if you want easy money, a guaranteed 30, 40, 50, 100% on your money every year, just buy Cathie Wood's ARK ETF. So let's go ahead and check on its performance, and we'll be fair. Let's look at the 5-year performance and check out how ARK Innovation ETF did in 2020. It was a pretty good year. So from January 3rd to December 31st, up 148%. Wow, that is impressive, genuinely impressive. So when we look at the S&P 500 during 2020, it was up only about 16%. But obviously, if you were able to get in on this low, put in a little extra money, you would have done phenomenal. However, since the new year, basically since December, January, Cathie Wood's ARK Innovation ETF peaked on February 12th, and it's currently down 27% from February 12th. However, if we look at the S&P from February 12th, the S&P is up 7 or 8%. So that's a big difference from being down that much to being up. And the reason why is because her ETF holdings are very unusual. Now, I'm not saying that in the long run, ARK Innovation ETF can't outperform the S&P 500. It very well could when you look at a 3-year, 4-year, 5-year, 10-year performance. So if you're in this ETF, I just want to say to you, if you believe in it, then stick to it. Don't sell low and buy high, which is what people were telling me to do when they were telling me, oh, it's shot up 140%. It's going to keep going up forever. There's a theme on my channel where don't give in to FOMO. When you see something going parabolic or it doesn't make any sense, just be a little skeptical and think, where is this going to be in 4 or 5 months? Can I buy in at a better price? In the short term, stocks and ETFs even are a popularity machine. What is running hot right now? But in the long run, they're a weighing machine. At some point, valuation has to matter. And with Cathie Wood's ARK ETF, she's very creative about how she chooses her valuations. So let's look at the top 10 holdings for her her main ARK ETF. And it's Tesla, Teladoc, Roku, Zoom, Square, Shopify, Unity Software, Twilio, and Zillow. And if we click on the PDF to see her entire holdings, her main ARK ETF has 52 stocks in it. And some of these are really out there. So there's huge upside potential. And when you look at the percentages, you know, they're very small percentages of the fund when you get down into these penny stocks. And if we can just be honest, the main reason why ARK ETF went up huge last year was because of Tesla. However, Tesla peaked. It peaked at around January 26 in the 880s, and it's currently down 31% from its all-time high. When we look at Teladoc, once again, there was this huge upswing in February. It peaked February 8th, currently down 47% from its high. Holy cow. Roku, I love Roku. It's a great company, great service. Peaked February 19th, down 26%. Zoom, this was the obvious stay-at-home play during COVID. So this peaked early. This peaked October 20th, currently down 36% from its high. Square is a great company. This one's pretty stable. It's not down that much, but it did peak February 19th, currently down 22%. Shopify, once again, great company, ran hot in February, peaked February 16th, down 16%. And Shopify once again peaked February 19th, stuck in a downtrend, down 34% from its high. Now, these are all great companies with huge upside potential, but their stock valuations don't make any sense. And Cathie Wood is so well known now that when she puts her hand on something, other people just kind of flood into it. It runs hot, shoots up huge, and then once valuation catches up, there's kind of a sell-off. The theme of all these stocks, PDE ratio 606. A good PE is 20-30. If it's a fast-growing company, you can increase that multiple 40, 50, 60, above 60, and I'm out. Teladoc doesn't have a PE because they don't make a profit yet, so you have to evaluate it in some other way. Roku, PDE of 421. How much more is Roku going to grow? I don't know. Zoom, PDE 116. And remember, these are the PE values after it's fallen 20 or 30% for these companies. Square, PDE 350. Shopify, PDE 95. And Spotify doesn't have a PDE because it doesn't make a profit. Now, coming back to Cathie Wood's main ARK ETF fund, when is this downtrend going to quit? When is it going to get back to 156 and start giving us those nice 140% returns a year? And it might be a while because investors are so skittish about companies that are massively diluting existing shares by issuing new company stock. They have very high PDEs. We're talking in the 5, 4, 600 range. Or they don't have a profit, they don't generate a profit at all yet. At some point, valuation has to matter, and in February, larger firms, larger traders decided to rotate out of this fund. They were happy with it in 2020 when we didn't know what was happening, but since then, they've moved to the industrials, they've moved to the bank stocks, the insurance stocks. There's this rotation that occurred in February, and for people holding these tech stocks or this ARK ETF, they're the bag holders for now. Now, as always, these are great companies with huge upside, but it's going to take time. It's going to take time for their fundamentals to catch up to their valuation. That's what I'm trying to argue. But in the meantime, how can you profit from this? How can you look at all this information of Cathie Wood's stocks and say, how do I make money from this if they're not going up? And the answer is bear investing, either buying puts or shorting the stock. And I went ahead and went through all of Cathie Wood's holdings in the main ARK ETF, and there's a very consistent pattern to all of these stocks. Basically, when she lists the stock in her ETF, she chooses to buy into it. There's a huge flood of other investors on that news that rush into the stock. And the stock will instantly, 5x, 10x, 20x, or something ridiculous. Especially these micro stocks that have market caps under $1 billion. So I went through all 52 of these, and I picked out which stocks would be the best to short if you're feeling lucky and you want to risk it going against Cathie Wood this year. First company is UiPath, ticker symbol PATH, and I guess this IPO'd only in April, so there's not a lot of information, but Cathie added it, and I guess it peaked at 85 on May 24th, and it's down to 72. Now, all these stocks that I'm showing you, the companies are still issuing new shares. They're massively diluting the existing shares. So if you're going to short it, you've got the company on your side issuing new stock. I have no clue what this company does, technology, software, whatever. But when you look at their fundamentals, the thing that you can look at if they don't have a PDE or a price to free cash flow, you can look at price to sales and basically just pick the ones that are the most outrageous. Now, obviously, if it's a newer company and they don't have customers yet, but they have a product, their price to sales will be misleading. Once again, I don't know how to value companies that don't have any information. But just looking at their price to sales, it's 63. What is a good price to sales? Well, of a mature company, under 0.5, maybe as high as 1. Once you start getting above 1, then you're entering this realm of startups or IPO stocks that don't make a profit yet, and they have tremendous upside, but in the meantime, the only thing that you can really measure them on is price to sales. So 63 is pretty high. Next company is Fate Therapeutics, and this one peaked back in January, been stuck in a downtrend. It's had 4 consecutive green days because I think this is shorted, and right now the Wall Street bets people are going after shorters, so be careful of them. And once again, looking at their price to sales, 171. Once again, less than 1 is a good price to sales ratio, but obviously these are biotechnology stocks, so it's just really hard to value them. Next company is Pacific Biosciences, ticker symbol PACB, And this company peaked in at $50, over $50 on February 11th, stuck in a downtrend. Once again, the last 4 days have been green. But their price to sales is currently 59. This is a healthcare and diagnostics research company. Okay. Next one is Ceres Therapeutics, ticker symbol MCRB. This peaked a while ago, it looks like. This spike right here is when Cathie Wood decided she was going to bless it and add it to her ETF. So it went from $4 to $24, kept going up to $34, and it's now been stuck in a downtrend. So what is their price to sales? 57. Yeah, it's a healthcare and biotech company. Ultimately, I haven't decided whether or not I want to short any of these stocks. Bear investing definitely is a different kind of psychology as far as trading. Haven't quite mastered it yet, but these are interesting opportunities. If you're not making money from the ETF going up, how can you make money from the ETF going down? Okay guys, if you enjoyed this video, give me a thumbs up so the algorithm knows it's good. In addition, if you have any comments or questions, let me know in a comment down below. I love hearing from you guys. Till the next video, take care.